Hello, friends. So we are seeing more turbulence in market today, and I don't think it is going to end anytime soon. In matter of fact, these turbulences are going to grow over the next couple of years. And there's a simple reason for that. Number one, we are seeing more and more ETFs. Number two, we are seeing more and more 2X and 3X ETFs. Number three, there's a lot of margin accounts, not just in the United States, but all over the world, specifically in Asia. Korean market, for example, they have a huge appetite for margin and risk taking right now. So these people are really piling on a lot of debt to buy the stocks. And then on top of that, we look at the market and people are always questioning this AI trade. Sometime, is there going to be profitability? Are people taking a lot of debt? Are we too stretched? And then we have influencers that are also impacting the market. For example, we recently saw President Trump talked about people shorting the market. And I think one name that kind of stands out is Michael Burry. And I'm assuming he's talking about him perhaps because Michael Burry decided to respond back to Trump as well. So it was kind of like interesting to see that. So regardless of whether you believe Trump or Burry, that's a different matter. But the main point here is that markets are going to remain volatile. So the only thing that can really work for you is to build your own conviction, to build your own thought process around what kind of companies you want to own. And second, you got to have a discipline as to how you build that position, which simply means you don't go all in at once. You buy a little bit and then you buy more as the market drops until you reach your desired allocation, and then you wait for that thesis to work out. And then we have midterm elections. A lot of people are worried about it. I'm not really so much worried about it, but that is certainly one case. And then inflation. So we have plenty of things in the market that can create some ripples every now and then. But when we invest, we don't invest for 1 day, 1 week. Well, I shouldn't say that. Some people do invest for 1 day, 1 week, but we invest for at least for years because we don't want to get hit with that short-term capital gain. So you have to have some fundamental thesis around why you want to own a particular company and where do you think this company is going. So today I'm going to talk about one company that I'm about to initiate my position in. Now this is just a beginning of a position, so it's keep that in mind. That means, most likely I'm going to add to it as the market comes down, and maybe market doesn't come down. You never know. So I never really know whether market going to go up or down. I know I pay attention to some macroeconomics, and but most importantly, I'm more interested in the growth of a company. That's the only thing that really matters to me. So I'm going to share this company with you, and don't worry, it's not one of those mega tech companies. There's a very high likelihood that you have never even heard of this company ever before. So this is what's going to make it very, very interesting. Now, before I start, let me remind you about a few things. Number one, I'm not an investment advisor, so I cannot tell you whether you should buy this company or not buy it. So please don't buy it because I'm saying so. Number two, I'm a tax advisor. So if you need some help with taxes, then you can reach out to me via taxcodeadvisors.com. Number three, I will be doing my month-end discussion calls again for the rest of the year. So I have one planned for July, August, September, October, maybe November, December, we'll see. Because, November, December, kind of hard to do it at the month end because people start thinking about vacations and all that. So it's very hard to do. So please, if you want to sign up for any of those discussion calls, just go to taxcodeadvisors.com and then you can sign up from there. And then we have a Wealth Summit coming up in October. So keep that in mind as well. So that's going to be a wonderful event, getting super excited about that. And like I said, I'm going to bring Manish at that event as well. He will be available to talk to you whole day about semiconductors and chemicals that are used in semiconductors. So that'll be a very, very interesting and engaging day for all of you guys who are interested in semiconductor trade. All right. So let's talk about this company. Now, have you ever wondered what happens after companies like NVIDIA, Microsoft, Amazon, Meta build massive AI data centers? Well, most of us stop at GPUs. At least we used to. Now, NVIDIA has been struggling for last several months, so maybe we moved on from GPUs. But then we moved on to memory. A lot of you guys are into Samsung, SK Hynix, or like me, maybe you're heavy into Micron. Some of you guys probably went into networking because you know that it takes special kind of networking to move data from one place to the other. And if you're not part of my WhatsApp group, you're probably wondering, what's the next bottleneck? Where can be the next growth? But if you're already part of the WhatsApp group, then we have already talked about it. The next bottleneck is power. The only reason that companies are not able to build as much compute as they want, they're not able to deliver what they want to deliver, is because of lack of power. So today I'm going to discuss a company that most of you guys probably have never heard of, but it's important because it supplies critical components used in jet engines and industrial gas turbines. So gas turbines, we've been talking about it for a very, very long time, especially in the WhatsApp group. GE Vernova has been a favorite name. A lot of you guys have talked about it at least for the last 2 years, and most of you guys made a lot of good money with it. But have you thought about which company provides products, services to GV Vernova? Most likely they're going to be doing really well as well. So this company that I'm about to talk about does exactly that. The company name is DPC, Doncasters Precision Castings. So it's an industrial company, and I'm very bullish on industrial companies right now, in generally speaking. Now, DPC recently went IPO. Okay. And most of you guys who've been in market for a while, you know that investing in IPOs, at least at the beginning, can be quite risky. You're better off waiting out for the earnings and let the stock kind of settle in, let the insiders get out and all that stuff. But I don't think that logic applies to DPC. So hang around with me, listen to the entire thesis, try to understand what I'm talking about. And towards the end of the video, I will reveal why, this particular logic doesn't apply to DPC. Now, maybe I'm right, maybe I'm wrong. I don't know. Maybe some of you guys can reach out to me and let me know why I might be wrong. I would love to hear from you. So, like I said, Doncaster just recently went IPO. But why do companies go IPOs? Well, they want to raise money. Insiders want to get out. Maybe people want to be rewarded for their hard work and all that. But Doncaster is not a new company. They've been around for many, many years. They've been providing the same services, same products for many years. So they're not new. They're not like somebody trying to figure out where they want to be. This company exists for decades now. So you can search for it. Obviously, they were private, but you can search for them, look for them. They have a very, very reputed company. Doncaster operates in two industries that most likely are going to see a multi-year growth. So it can potentially be a great compounder. One industry is commercial airlines, and the second is industrial gas turbines. Now, airline industry is very tricky in a sense that, they get impacted by gas prices, inflation, and all that kind of good stuff. But if I were to ask you, will there be more airplanes flying 5 years from now? What would your answer be, regardless of what happens in the economy? Most of you guys will say, obviously we're going to have more airplanes flying. Second is industrial gas turbines. Okay, so like I said, we've been talking about GE Vernova for a while, and all of you guys who invested in GE Vernova made money. Why is that? Because the demand for GE Vernova products is huge. People keep placing more and more orders. Now, Doncaster stated that 77% of their revenue comes from these two industries. So think about that for a second. That means majority of their income is coming from these two industries. So I love that because both of these industries have a very powerful tailwind. They are going to grow for many, many years. Now, I think we understand the basic, right? The AI is creating a big boom for power. There's a huge need for power. Utility companies are not able to provide the power. So these data centers are turning to gas turbines. Now, there are a lot of companies. We talked about GE Vernova, but there's Siemens Energy. If you don't know, there is Ensalado Energia. That's another company that you can look into. So all these people make the world's largest gas turbines. And Doncaster is the one that provides the critical materials to these companies. What kind of material? Well, if you were to build a turbine, what do you need? You need blades, you need castings, you need frames, you need housings, you need nozzles, you need cooling fans, you need wheels. And these are not like you can just go build anywhere. These products need to work under extreme temperatures. They need to work under tremendous mechanical stress. So, many of these components are produced using nickel and cobalt super alloys that can withstand incredibly harsh operating conditions. So if one of those components fail, the entire engine could fail. So this makes quality absolutely critical. So why I'm telling you that? Well, I'm telling you this because Doncaster would not have survived so many years if they were not able to deliver that kind of quality. Now, That is one point of view. Another point of view you can ask is, well, who are their customers? You know, so let me tell you, their customers are GE Aerospace, Pratt and Whitney, Honeywell, Rolls-Royce, Safran. You probably know Safran's also make a lot of engines. Indian Air Force is trying to buy some of those right now. They're in negotiations with them. On the gas turbine side, they work with GE Vernova, like I said, Siemens, Dosan, Encelado, Energia is one of their customers as well. It also supplies turbocharger manufacturers such as BorgWarner, Cummins, Garrett. So I'm telling you this because it's not like one speculative company selling to another speculative company. And you see that quite a bit in IPOs because you don't know. And I say that, I'm not saying they're bad companies. I'm saying that you see that in IPOs because you don't know how those companies are going to grow. But what I'm saying is Doncaster customers are established companies, very well-reputed companies, some of the best companies in the world. And Doncaster itself is in business for many, many years. If I'm not wrong, probably around 200 years, maybe even longer. So they've been around for a long time. So as far as do they have good product? Do they have a good business model? Do they have good customers? It's like check, check, check for me. Now, one thing that makes this business especially interesting is its competitive moat. Making precision aerospace casting isn't easy. It requires years of engineering expertise, specialized foundries, expensive equipment, strict certifications, and extensive quality testing. But perhaps even more important, once an aircraft engine manufacturer qualifies a supplier, changing supplier becomes extremely difficult. Every new supplier must go through years of testing and certification. That creates extremely high switching costs. It also explains why approximately 70% of Doncaster revenue comes from long-term agreements lasting 5 years or even longer. Many contracts even include inflation pass-through provisions. That gives company excellent revenue visibility. So let's talk about numbers because, I can say whatever I want to say, but without numbers, it doesn't make sense, right? Revenue was about 237 million, which was up 26%. Aerospace revenue increased 43%, so I love that. Industrial gas turbine revenue increased 29%. Transportation, not a whole lot. I mean, that was about flat. I think part of that reason is because of high oil prices and all that as well. So there may be a little bit more growth next year. So those are impressive growth rate for a manufacturing company. Now, even more encouraging was management says this acceleration was driven by new manufacturing capacity coming online, kind of like what you're seeing about Micron, Samsung, all of these companies are setting up new manufacturing. And right now we are seeing a lot of growth in these memory companies because of higher margins. But I don't expect those margins to stay high for a very long time. I think once the capacity comes online, those margins will come lower, but the sales will increase. That is exactly what you're seeing right now with Doncaster. In other words, they can now produce more products to meet growing demand. Part of the IPO proceeds that they're getting will be invested in expanding capacity even further. So think about it for a company. So they have just recently expanded, and now they want to expand more. The only reason they would do that is because they can see more demand in future years. So one of my favorite metrics for industrial companies is to look at the backlog. If you look at the backlog makes sense. Most likely that's a good company. Backlog represents work that customers have already committed to purchase. So as of last quarter, which was ended in March 29, 2026, so Doncaster reported a backlog of approximately $930 million. That's more than one full year's worth of revenue already under contract. Now, for investors, that provides significant visibility into future sale. Now, what makes this company unique is that it's not dependent on just one trend. It sits at the intersection of two major global growth stories. Commercial aerospace, global air travel is recovering, obviously, after COVID. It's continued to increase, although with the restrictions with immigrations and all that stuff, it's putting a little bit of a hiccup there. But overall, global air travel is increasing. Airlines need more aircrafts. I don't think anybody will doubt that. Existing fleets require maintenance. Defense spending is just growing, and President Trump has already talked about he wants more defense spending. So all the aircraft that he will be building, drones he will be building, a lot of those going to use these castings. Space is another field that we know is growing. Before it was only the government, now even the private companies are participating. So all of that supports long-term engine demand. Second, industrial gas turbines. AI data centers are driving unprecedented electricity demand. Utilities need additional generation capacity, so natural gas turbines remains one of the fastest ways to add large-scale power generation. Every new turbine needs critical components. That's exactly where Doncaster participates. So I love that. Now, um, there's a reason why I want to be in this company. Now, all of that stuff's good, right? The aerospace story is really good. Defense story is really good. Need for energy is really good. All of that is good. But generally speaking, once companies go IPOs, what happens? Well, insiders start selling. Well, in this company, it's the other way around. After the company went public, the insiders bought the stock at $33. Their CEO spent several $1 million. Their director bought several $1 million. Pretty much all the executives, I think they spent almost, I want to say, $80 or $90 million buying the stock on an open market. So that is one of the key signal that most likely they're expecting to release a really good quarter anytime soon here. So I could be wrong, but I'm not an astrologer, so I cannot predict future. I can only look at the data that is available to me. So are there any risk with it? Of course. I mean, if you think about it, AI data center, or for that matter, even aerospace, are cyclical industries. You typically do a lot of build out, and once the build out has happened, then the demand will be flat for a few years, and then you start building it out again. So both of those industries are cyclical. So that is a problem. Second thing is anytime you're going to hear that AI trade is superheating or CapEx is coming down or anything like that, people are going to sell off their stock just like anything else as well. But, overall, I think with $1 billion in backlog, with heavy insider buying, with tailwinds from two sectors that most likely going to grow over the next 5 years, I think it makes a pretty good sense to invest in this company. I think the stock is down to $45, maybe $44 right now. I'm hoping to buy it below 40. Maybe we get there, maybe we don't get there. So another 10% correction, I'm certainly interested because insiders bought at 33. So I would rather like to buy it at that price than anything else. Now, when I was doing the due diligence on Doncaster, one of the things I learned was that, even when they went public, the stock was 10 times oversubscribed. There was a lot of demand for this company. So, I'm a buyer at every single dip for this company because I do see a tailwind over the next several years. So hopefully you like what I have to share with you guys today. It's not something that you can just generally go online and find it. It's one of those hidden gems. So take a look. If you like GE Vernova, if you do agree that there is a big bottleneck in power, if you do think that there will be a lot of demand for aircraft engines in future years, then you probably will like this company. But once again, I will advise you to do your due diligence. Take a look at the numbers. It's IPOs. A lot of that information is not public yet. We're going to get the first ER and we're going to learn more about the company. So that's one of the reasons I cannot go, 10% of my portfolio in Doncaster right now because I only have limited information. But at the same time, if these people come out with a good ER and the stock jumps from 44 to $100, then I do want to have some exposure to it anyways. So I hope you love it, and I'll be happy to share more information with you. But before I go, please do leave a couple notes for me. Write in comments. What do you think? What do you like? What you don't like? So that way I can bring more quality content for you in the near future. And I'll see you in our next discussion call very, very soon. Thank you, guys. See you soon.